Greetings to you, my trading friends. It is Thursday, April 28th, 2022, and I have another non-cherry bomb, but cherry bomb inspired trade for you today. If you're interested in sticking with my trade ideas, it's okay if you want to do tasty trades. Cherry bomb today, which is a GM trade, and I figured, you know what? Let's look at an alternative. Ford has a liquidity rank of 4 drops out of 4 and an IV rank of 64. They've had recent earnings, so we should expect a little bit of a volatility crush. It does look like the market is moving. The U.S. market is moving up quite a bit. The biggest winner right now is NASDAQ at 2%, just over, no, 2.1%. And the biggest loser right now looks like VIX, down 6.7%. So, with that little bit of a market recap and an overview of the trade, by the way, we're selling premium, short put. That's what we're looking at today. And I'll tell you why I think Ford might be a better idea, especially for you small account size people, even though we're going to be simulated trading. Let's go ahead and get started. If you're not interested, have a wonderful day. If you are interested, I'll see you on the inside. Hi, everybody. My name is Neil. This is Option Theory. Thank you so much for joining me today. I do appreciate all your views, your watches, and especially when you watch to the end. Thank you so much. That does help. All right. We're inside of Thinkorswim's simulated trading so we can get all the learning without any of the risk. And yeah, so let's take a quick look. Here's Ford's chart. Ford Motor Company. Just out of curiosity, let's compare it to GM's and see if they have similar looking. Yeah, I'd say that's pretty similar. All right, but one of the things I want to point out here is that while they're similar, they're not the same, of course. But what I like about Ford a little bit better is the fact that it's a lower price underlying, right? So if you're going to do a short put like this, there's less room to go down. So let's go ahead and kill the GM chart and see here. We are near the bottom band, right? I feel like GM does set up a little bit better for a bullish trade because we haven't, really hit it. We're definitely on a downward trend here. But I feel pretty comfortable in my assessment that is non-scientific, that Ford F-150 Lightning is going to do wonders for Ford in the long run. So let's take a look at this trade. So go to the Analyze tab, go to Add Simulated Trade. I'm going to be in the June 17th monthlies. Yes, it's over the 45-day tasty trade mechanic, but that's okay because I prefer higher liquidity, right? If you compare the liquidity to, let's say, just dropping down to the June 10th weeklies, you'll see there really isn't a lot going on, right? Let's go then to the June 3rd weeklies. Okay, there's some open interest. You could go there if you want to be in that range there, I suppose. Yeah, but I'm gonna go with lots of liquidity, tighter bid-ask spreads. So what I have here is for us a short $13 strike put here. That's a 22 delta. It's 5-cent wide. You can get a little tighter if you go to the 12. Look at that, 105,000 open interest. So this is, I'd like to try to collect a little bit more premium. I could see why you might want to go for the 12 strike as well. But let's take a look at the 13. Let's analyze that one there. I've got one contract, 13 strike put, 51 cents dialed in to a limit order so I can get kind of a mid price. Let's go to the risk profile. I've got the date in the top right corner set to the same date in blue you see in the bottom left corner here. That's at expiration. So we know we're looking at a 75.8% probability of profit at expiration because I have that gold price slice set exactly where that blue line crosses the $0 break-even line there. So, all right, cool. So we know we have a 75.8% probability of profit on that one. And if I pull up Tastyworks, we're going to take a quick look at the P50 because that's another metric you might like to see here. Well, I get that's a little small. There we are. We got a P50 of 90%. 90% probability of us being able to take off half the credit. Yeah, $25 somewhere in the next 50 days. That's fine, right? That's okay. It'd be nice to hold it to expiration because would you be horrified to own Ford shares at $13 if they're at 15 now? I don't think so. I don't find that to be a problem. So I'm going to go ahead and put that in the IRA account. I'm going to right click it. It would be great if I actually switched back over to Tasty trade, Thinkorswim. I want to right click this trade, choose confirm and send, allow you to see that window here that the max profit's $51. The max loss is $1,249. Of course, that is the strike price minus the credit received. That's how we get that number. Going to go ahead and throw that in the working orders, go back to full screen, and give you a thumbs up if you made it this far into my video. Just take a quick look here. Let's go back to the margin account. I do expect, by the way, the SPYs to come up for us quite a bit today. I'm curious to see how that's going to go, knowing that the S&Ps are up 1.6% right now, the futures. So it'd be nice to see our SPY trade come back to us. That'd be great. All right, I did want to point out that we do, if you put on the Bank of America trade with me here, we are at 22 days to expiration. So managing today or tomorrow, according to the Tasty Trade Mechanic, would be a good thing to do. I'm thinking about rolling that one out in time. So what do you think? Love to hear from you in the comments, everybody. Hope all is well. Until I see you next time, may the market be with you.